Everyone talks about the dip, but no one is really talking about preparing for the dip. If you have seen my couple of last videos, I have shared that this war-driven panic was another opportunity to buy. I said it back in November 2025 as well, and I said it again in the last couple of months. What I wanted to convey through this video is that investing does not only mean buying when the market falls. That is not enough. Real investing is also knowing when to take money out, protect your gains, and keep cash ready for the next downturn. Because from my own personal experience, I have seen that I was getting too comfortable, feeling smart in the green markets. But as soon as the red market came, I feel useless because I don't have any cash to invest in. That is where I started doing something from like last 4 years or so, which is what I basically take out profit from the industries which have grown up and invest the money in the industries which have not grown up so far. So recently, while this war situation was going on, energy stocks in my portfolio like Suncor, TTE, ConocoPhillips, ExxonMobil, IXC, they moved up strongly. Some were up around 20%, and the biggest move I saw was close to 88%. At the same time, my other stocks in my portfolio were down by 5 to 15%, and I showed that in my short videos as well. Now that energy stocks are cooling off and pulling back, I'm basically applying the trailing stop loss to book the profits. I also shared my trailing stop loss strategy, what percentage I used, the calculator in one of the videos, so go and check it out after this one. But this is how I profited by using this strategy. In April 2025, I made about $15,000 selling gold ETFs ZGLD, which has run up a lot in my portfolio. Back in November 2025, I sold SLV, another metal stock for silver, and Walmart and Target stocks, which are basically the retail industry stocks, and made around $10,000 in profit. And lastly, in the last 2 days, I made around $9,000 by selling stocks like Suncor, ExxonMobil, IXC and TTE from my portfolio. And just because I booked profits in energy does not mean I'm done with energy. I will be still keep buying exposure over time, especially through ETFs, because if everything is falling, it's better to put your money in the ETFs across the industry and then one or two stocks. So the strategy is basically simple. Take profit from the sectors that have already run up and move that money into ETFs that have still not moved much. This strategy is easier said than done. It requires discipline. That is exactly what I'm doing now and what I'm sharing through this channel. At this moment, I have around 15 ETFs where I'm targeting my money next. A few of them are Bitcoin ETF, US healthcare ETF, Sky, which is the cloud computing ETF, Hack, which is the cybersecurity ETF. And I'm watching these because they have not moved up like others in my portfolio. And on the individual stock side, a few names that I'm watching closely are Elevance Health, United Health Group, Berkshire Hathaway, and Apple. I'm bullish on Apple, by the way. Now, this is all about individual stocks, but I am much more heavily relying on ETFs when it comes to this volatile market. And I can do a full breakdown of which ETFs I'm buying, how much I'm allocating, what is my buying strategy, what is my selling strategy, and how I'm booking profits during these swings. I will share all of this in a free 45-minute session. And for that, I do not want a like, I do not want to subscribe. I actually want a shout out. If you share this video on your WhatsApp, Instagram, LinkedIn, Facebook, or YouTube and put the link of your post in the comment section, I'll personally invite you to that session. It will be free of cost and we will discuss my entire ETF strategy. And based on anybody's available capital and appetite, how much a person should put, what is the buying strategy should look like, what is the selling strategy should look like, we'll discuss all in that video. And I'll see you on the other side making some profits. Take care. Bye-bye.